So a tanker carrying the first cargo of liquefied natural gas from LNG Canada set sail Monday from British Columbia's northern coast, ushering in Canada's long-awaited debut into the global LNG market. Let's go to Cole Smead on this, CEO, portfolio manager at Smead Capital Management. Cole, thanks for joining us today.
Thank you for having me.
So I know this is quite symbolic in many ways, but is this expected to be a quick ramp up for natural gas exports for Canada?
Yeah, so I think the general consensus among investors is that natural gas is going to grow a lot in use. A lot of people will use AI and the CapEx spend that's going to go into the computation of what we're going to do in the future in productivity and AI. I think the only question would just be, what's the rate of change? What's the return on those assets? And I find it interesting that the LNG game has been just much more comfortable for investors versus oil has been very uncomfortable. If you look at the last 2 months in the subject, the OPEC plus increases in supply have really scared investors. And to be honest, that's where we've seen some of the better capital allocation and aggression. Look at what's going on with Strathcona and Meg right now. Adam Waterous effectively sold his nat gas assets. Well, to your point, there's a lot of excitement about what's going to go on in nat gas, and he's out buying heavy oil. That's exactly what the market wasn't doing, and we find that to be far more interesting right now.
Okay, so which countries will benefit from Canadian natural gas? Who do you see being the big customers?
Well, anybody that's going to be collecting those exports, whether it be from Canada or the United States, are really going to be, Asian nations, broadly speaking, in Europe. Either the outright demand growing, which would be Asia, or just the price coming down in the case of Europe. So I think those are the most natural end markets for that. Obviously the export market isn't going to really serve the U.S. market because we have a plethora of natural gas. The biggest problem with natural gas is not how abundant or available it is. It's really how you get it out. And so the export market, liquefying it, putting on boats, that's something that really hasn't, like you said, it's never been in Canada. We're more recent in that in the United States. But ultimately, energy is a proxy of economic progress and income growth and really the prosperity of humanity.
Will it benefit from a move away from coal from some of these countries like India, like China?
That's all really just price dependent and also the cost to move the goods. Obviously, in Asia, coal is very prevalent. I mean, for example, you can go out and get coal in China, you can go out and get coal in Australia. And the reason why that's important is because it's closer to their end markets. If you look at natural gas, the largest growth of natural gas has gone on really in Canada and the United States. And the end markets for that are local, but the export is not close. So I think you're going to see this paradigm of the cost of the commodity and the distance to travel because it takes energy to move energy, as they say. So just moving it across the ocean is going to cost some real money. And so it's going to be who has that price sensitivity to move it and who can get cheaper prices for systems that are already built for natural gas. I think you're going to see a slower adoption curve if coal stays cheap because the cheaper coal is, the more price competitive it is against natural gas. Okay,
so give me a snapshot of where you see prices going in the energy sector, because as you mentioned, gas has been sort of on the back burner, oil has been the primary, but we have nuclear power that people are looking at now, again, to sort of feed the databases.
Yeah, I'd just say commodities in general, but energy markets in general are going to do well. And I say that just as a proxy. I would say that commodities are going to beat, say, the S&P 500, which I know that sounds outlandish, but it goes on from time to time in those fashions. So I look at this as we need an abundance of energy in every way, shape, or form. The catch is that we're coming off of an era where asset allocators and governments and really smart people, smart, like I'll put in parentheses, said that we were going to starve ourselves into this future world that we live in. We were going to use way more technology. It was going to get way more efficient. We're going to need a lot less energy. Well, as Mike Tyson, the great theologian, once said, everyone's got a plan until they get punched in the mouth. And effectively, we watched global conflicts go on the last 2 years, and we've watched a pandemic really roil our world, and we find out really quickly that we're short energy. So I think we're going to need energy of any form. The question people should always be asking is, in 10 years, what's not going to change? I know everybody wants to think about change and how it comes, but I think a lot about what's not going to change. And what's not going to change is carbon-based fuels are going to be the dominant way we progress in this world. It doesn't mean wind and solar are not going to grow, but outside of subsidy, it looks like they're going to grow far less. I think the Big Beautiful Bill is a picture of a lot less subsidy. And so as we go to this future, the economy is going to grow, humanity is going to thrive, and how we're primarily going to meet that is through these carbon-based fuels. And I don't think most investors or governments really understand what that means.
Life lessons from Mike Tyson. That's a new one. Okay, I do want to talk to you about renewable energy because you touched on it, but we know the U.S. is sort of pushing back, removing credits for renewable energy, green energy, that kind of thing. Where do you land on the outlook for this kind of energy?
Yeah, I mean, the investment results have been pretty poor so far, and that's been with subsidy. And so I think a lot of the hype that we saw 3 or 4 years ago, that's kind of ebbed and flowed. I think the real question I would ask is, just logically speaking, if these highly indebted governments in the world, including my own government, the U.S. government, cannot provide the subsidy that they did in the past, and if you look at Europe, they're borrowing a lot for defense, and they're trying to throw all kinds of other things into it. But these are not the people at the table that I would trust, because ultimately governments at some point can't spend and they pivot. That's just what their electorate does. And so I think the subsidy game's kind of up, and these things have got to stand on their own 2 legs. I think it'll be really interesting when we've heard about all these costs coming down in some of these renewables. The question is, who can really run low costs? I think that's to be seen. If you look at solar, its biggest problem is it's not a very concentrated form of energy. In the case of wind, obviously, there's just days that the wind doesn't blow. So I think the constancy of energy and the cost of capital is going to be a real question for that. Here's what I do know. I do know nat gas is going to get used. I do know oil is going to be used, and I do know coal is going to be used, and those are subsidy free. And I don't think that's going to change anytime soon.